The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host at the headquarters of technical trading and investing, TFNN.com. I welcome all my listeners, especially on a day like this where they may have thought that, boy, how are we going to make any money in this market? And we're going to start talking about how we can over the next few days, at least what I see setting up. But it is a gorgeous day out here. And, of course, yesterday we were talking about today being one of the days where I think the volume was going to start to drop off. Interestingly enough, I think we had, 2.2 billion shares or something yesterday, 2.3 starting the show. I was pretty sure that we'd be lucky to get 2 billion today, and we're out at 1.95 billion shares. So we are already starting to see that. And, of course, when we tried to get down lower. In fact, we were down 12 points lower than where we were, and 15 points off the highs on the S&P cash. And we'll talk about that as the show unfolds. That's what they call a tease in big radio broadcasting. Anyway, it is a beautiful December 4th, and I tell you what, I got my smarty phone out and went to the dog park today and sat down and thought a great deal. I'd been looking at charts all morning, trying to put together if there was any way I thought this market was going to crack. Of course, the market was down earlier. And I thought, nah, ain't going to happen. Wouldn't be prudent. Wouldn't be possible. And we'll talk about that, too. Anyway, on this day in 1991, Charles Keating Jr., the kingpin of the savings and loan crisis, is convicted on 17 charges of California state securities fraud. The former chairman of Lincoln Savings and Loan is found guilty, making false statements and omitting disclosures about the risk of his junk bonds, and that they were sold to more than 17,000 investors for roughly $250 million. And, of course, many of them were worthless. Many of them were elderly widows and orphans and that kind of stuff. And I don't know whatever happened to him. Did he ever get out of jail? Did he die before he went to jail? I can't even remember. I'll look it up during the break. But I don't think much actually happened. But on this day in 1991, justice was served, if you can say that so far. But there's nothing to be so concerned about as your cash. There are a lot of scoundrels. I like that word. You don't hear many people being called scoundrels these days. It's kind of a lovable name for a con man. But I'm going to talk about one of those yet again today, too. But it is interesting to see that well, I like to say this. If you are in the investment community, you are swimming with the sharks. These people did not go into the finance business on Wall Street to cure cancer. They did not take a vow of poverty to go work into the slums of India like Mother Teresa. They are there for one purpose only, and that is to make cash by hook or crook. And you always have to be watching out for your money. When they say it's not about the cash, put your hand on your wallet firmly and do not let it out. Because it's always about the cash. It's not about the money. It's always about the money. When you hear that, you should just change that in your mind. You should rewire your mind to say when you hear somebody say it's not about the money, to it's about the money. That's the way it should always be. Anyway, on this day in 1991, Of course, I was looking at the lows out here today and I've been looking especially at options over the night. And if you have emailed me, for some reason, all my email systems were all locked up. I reset everything and got a flood of emails from yesterday. I'll try to answer those today for the couple of ones I didn't get to. I'm not exactly sure why I wasn't getting email, but I certainly wasn't. So I went through it as quick as I could just before the show. And I saw a couple of them I didn't hit yesterday, and that no bearing on you, just for whatever reason, Thunderbird, my email reader of choice, decided to have a hiccup. So we'll get to that. But you can always email me at path, P-A-T-H, at TFNN.com. And, of course, you can dial me. At 877-927-6648, or you can post a message in the den. And let's see what else I'm wondering about here. I'm looking at sale ads, too. I popped into the Tiger's Den this morning to show that there was a laptop for $100. I missed it when Staples had it for Black Friday. Actually, Black Thursday night. I didn't feel like going over there. But it was kind of interesting, and that is that we saw it again today on Best Buy's website, and that is actually one that you could use for, it's not a powerful laptop, but laptops for $100. That's got to tell you a little bit about what's going on in the marketplace. I don't think you could buy the battery for the thing for $100, but I've been using one similar. The only real big difference between the one for $100 this morning and the one I paid almost $300 for last year was that the one I have has the touchscreen, and just about everything is going to, for Microsoft, for those things, is going to be touchscreen based, so you probably want that. But if you just need something for email and to carry with you on trips and stuff, I'm 95% of the time around my house if I'm going to use a computer or a laptop or do any serious work. So it's nice just to have, for the 5% of the time that I'm out, to have something I can pick up. Most of its duties are sitting on top of a speaker I have. I have some nice Samsung studio monitors up here because I like to listen to music during the day while I'm trading. And it sits on top of there with a big countdown clock. Well, maybe I'll show it to you after the next break. I'll dig it up and show it. But basically it just says A block on the air, and I've got 5 minutes and 38 seconds to my break. So it stands in as a giant countdown timer most days, but some days it becomes my email client when I'm on the road or moving around or going from town to town. Anyway, of course, I saw that low out there this morning, saw it getting pushed down, didn't see a lot of volume. And again, we're still under 2 billion shares on the New York Consolidated Tape here at, 2:14 Eastern Time. So volume has gone light. It's going to be very tough. I'd been looking at a lot of charts last night, mostly from options. And there's one thing about December and options, and I've brought it up many, many times, and that is it's incredibly hard to push the market down. It may not go up, but it's incredibly hard to push a market down into December. And most of the time, you're going to end up expiring at the far end of any kind of bell curve when it comes to what options are saying. And I cannot recommend being short anything. I kind of am wondering about some of the things I'm long. The narrowship is the leadership is getting incredibly narrow, but that does not mean that the indexes will break before the end of the year. So we'll take a look at that. Other things of interest out here, though, are going to be all these people getting sucked into shorting these little blips down, only to have to cover late in the afternoon. That's not uncommon, and that is to hear that siren song, like the Greek, what do they call them? The Greek mythology stories. And someone sent me an email about actually who it was about. Then I looked it up, found out that there were several stories about sirens, and that is pretty women singing, luring the sailors in from the sea, and they would hit the reefs and, of course, sink and drown. But there's several stories. In some of the stories, there's 2 sirens. Some of the stories, up to 7 sirens. And many different people that were supposed to be involved in many different names. So I don't know exactly what the truth is for Greek mythology, other than there are a lot of stories. Probably none of them are true, but they are all around. But, of course, that siren song this morning would be that the market's going to break, the market's going to break, the market's going to break. I think it's going to break, and I think that this activity here shows us one thing, and that is that we are probably on the verge of a huge move down. The problem is you're going to have an abundance of caution, and there will be a clear signal. It won't be something that you cannot tell. It's going to be a huge and monstrous signal when it comes time to pull that cord and go short. I've been looking at playing at some short squeezes that probably not going to play out. I'm going to probably end up losing about 50 cents on some options, which is not a big deal. But what can you say? There just isn't a lot moving out here. Nothing that certainly gives you the risk reward of 3-to-1 or 5-to-1 if you play the physical equity. So you have to be in options, and even then, those are somewhat problematic. But we'll have to see how these stocks close out here at the end of the day. But for what we sure seeing here, we should see some pops. They'll turn you into a toad. Oh, when? Been waiting 2 years. Whoosh. When? The answer is probably after the first of the year, and if it doesn't do it then you've got about another 6 months, probably until May. So I think that there's 2 major opportunities for the market to crack, and you can wait for 2 years. I made a huge amount of money shorting stocks, so those basically 3 big moves out here. I'm not expecting this market to crack before January 1st. Somebody, if they're asking. I don't think that there's any way that happens with the declining volume and high short interest, which is what we're going to talk about here today, and get into the charts of a lot of stocks with short interest. I'm waiting for these huge moves that are probably going to be in these stocks as shorts step out of the way before the end of the year. If we don't get them, that's even more bearish. But my guess is that it's one of those markets that is being held up by shorts slowly covering into the end of the year. Bill Gross, yesterday I kind of opined that maybe he wasn't as nuts as he was acting, but he wanted to get out. And then, of course, he came out with this last night. How could policymakers have allowed so much debt to be created in the first place and then fail to regulate their own systems accordingly? How could they have thought that money printing and debt creation would create wealth instead of just more and more debt? How could fiscal authorities have stood by and attempted to balance budgets as opposed to borrowing cheap and investing proceeds in infrastructure and innovation? It's been a nursery rhyme experience for sure, and more than likely without a fairy tale ending. Bill Gross is gone bearish. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, yesterday I posited that Bill Gross and L. Arian, it may have been kabuki theater. That normally you don't get 70-year-old men going nuts and then getting hired by somebody else. Apparently, he probably had to go over Janice and actually act like a human being and not like somebody with his hair on fire. I wonder how much of that stuff was just a way of getting out of PIMCO before everything blew up in his face and being able to go over and start anew somewhere else after being king of the bond market. But there was just too much of it. Like I said yesterday, my spidey sense is just up on it. And maybe he's trying to get out in front of this. Unlike people, I think we brought up Greenspan yesterday, that stood around until the hand grenade went off in his hand. And, of course, we had to have somebody else come and clean up all the problems. I guess he actually handed it off to somebody else, but the pin had already been pulled. Let me put it that way. I think What's His Doodle knew that he was coming in for a beating when he came in as the head of the FOMC, and I think he's probably glad that he's leaving now, thinking it may even get worse. What they've tried really hasn't jump-started the markets and the economy as they thought. But I'm not a real big bond guy, but it certainly James Bond. A lot of a big Bond guy, but it is. Yeah, I just get the feeling that there's something going on in bonds out here that I can't put my finger on. But maybe, that Keating thing and junk bonds are maybe more prevalent than we thought. Maybe there's a lot of these things are going to blow up in people's faces. Maybe we've got a market that's way too leveraged in them. Like I said, I don't know enough bonds, but boy, everything, if I was a bond trader, my experience in equities and technology just kind of makes the hair on the back of my neck stand up a little bit. New deals. But anyway, maybe I keep on looking for what's going to be the impotence for the move down. But it may just be a market that's probably as high as it's going to get, no matter how much the Fed decides to juice it. But again, the whole idea of the Fed right now is to inflate the market and then try to get it to stabilize at some high level and wait for the markets to come back and catch up to the inflation and overpricedness that the Fed has engineered. And I don't know. Markets are always smarter than FOMC meeting people and everybody else in the world. And it's hard for me to think that it doesn't go back to the mean, whatever that mean is. What else? If you missed it and you blinked, crude fell below $50 for some producers on November 28th. And just kind of coming out through some of the state sales numbers, according to a report from Bloomberg's Dan Murtaugh. So if anybody's been thinking about $50 crude, it certainly hit that in the Bakken Shale regions. And a lot of people trying to get a lot of what they had out at any price over the last few days, which I think is fairly interesting. Today, what do we have on crude? It's up. It's off 45 cents, 66.92. But of course, a lot of it has to do with transportation, whether you can arrange transportation. So some places are severely depressed because of transportation costs, and crude selling a little less in that area. But $50 crude, it sold for it. $49.60 was the bottom tick on crude so far. So I think that will be interesting. Also, in some areas, gas is below $2 a gallon. At a station in Oklahoma City, most of them are $2.01 to $2.05. I guess this guy decided to be the first guy to put $1.99 up on his sign today, and got lines around the blocks. So we've got it, $2 a gallon. And that's it. Colorado is interesting in that it's now become a major exporter of dope. Apparently, if you get Maui Wowie or the stuff up there in, Humboldt County, pretty high in THC. Well, they've been transplanting a lot of those plants to Colorado, and now it is a major export to Mexico, who won't take the horrible stuff that they have anymore to smoke. They want the good stuff from the US of A. Colorado now a major exporter to Mexico.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, interesting anyway to see us. Now, maybe wouldn't it be interesting to see the U.S. become the major exporter of weed to the world? Weirder things have happened. We're probably the biggest exporter of alcohol to the world, aren't we? I mean, decent alcohol, not rot gut. But weirder things could happen. Other things going on. We were talking a little bit earlier about scoundrels in the marketplace. Mr. Kramer from CNBC has been taken to task by a major investor. Cannell notes that the market cap of TheStreet.com has fallen from around $1.7 billion when it went public in 1999 to about $80 million today, loss of more than $1.6 billion in shareholder value. And he's kind of written an open letter to Kramer. He says, when you lie upon your deathbed, how will you reflect upon your legacy? I don't have a lot of love lost for Kramer. He made most of his money. If you listen to all the people that were and did work for them, some of them wrote books. He was basically an insider on Wall Street. He basically dealt illegally, allegedly, from all the people around him, by insider information. He was quite the networker from people that were all around Goldman Sachs. But the question is that if activist investors are important, as Kramer said, why aren't they important for TheStreet.com? And anyway, he's lighting a fire under his feet. I've always wondered about the actual desires and beliefs of what Kramer does. I still think he's the insider on Wall Street. He is more than willing to butter up somebody he likes and shellac those he doesn't. But it seems to me a lot of opportunism if you've got the kind of megaphone that he has and the viewership for people tuning in at that time for retail investors. If the retail investor ever really came back, how huge would he be if people started following him? They get home at 6 o'clock, watch a show, and start buying all kinds of crap that he pushes out. He has been at the head of 4 or 5 stocks that he's pushed absolutely to the moon that have come crashing back down to almost nothing. And I don't see any responsibility talks about the people that and stocks that he's been able to push up through his shows. I guess it's both if I was in his shoes, both a curse and a blessing, a self-fulfilling prophecy of enough people that could come out and move the market on what you do. But just Google that if you want to read more about what this guy says. But he says, hey, Kramer, quit blowing your mouth at 6 o'clock and get busy and build the street.com back up on something. You're a publicly traded company. Get to it. And I guess you can make a pretty good case that he needs to either move along and get out of the street.com and let somebody use something with it, and or quit spending his time elsewhere if he's truly running a company. Cutting the cord, or courting the cut. Anyway, data from Standard Media Index, which claims to pull 80% of all U.S. advertising dollars, basically is saying that once again there was a considerable drop in October and going into November on the same period on ad spending. And my guess is that this was twofold. One, probably half of that was ad spending. The other half was no one wanted to run any ads when people like me would not turn on the television for the fear of a political ad running. So it is going to be one of these things where you have to look at it. But what can I say? Comstock Partners also has a piece out. Just Google Bubble and Comstock Partners. They are warning, as they have multiple times before. They were warning about mid-1999 about a giant bubble in the dot-com space. They started warning in 2007 before the blow-up in the financials. They are now out with a big piece also saying that they're going to start shorting pretty much now, and they're more than willing to hold their breath until the market comes back. I don't know if I'd do that if I were them, but they've got a pretty good track record of going short at the right time. But another good piece out from those guys. Of course, crude prices down. A lot of people out there pushing some of these stocks, and the ones that are truly moving out there today are the airlines. This was as of 2 o'clock. UAL was up 6%, Delta up 4.5%, AAL up 3.5%, JetBlue up almost 2%, and even Love Airlines up 1.5%. If we want to look at these stocks that are truly moving. Wanted to get into a lot of stocks that were highly short, so we're going to try to go through as many of these as we can. But these are all highly shorted stocks, and some of these may be giving us a little taste of what's going on in the markets here. Okay, where's my... that's Skype. Come on. Somewhere I should actually have that. There it is. For some reason, something vanished from my screen. AmTrust Financial Services, AFSI. This one just peaked above its high. Very high short interest. A lot of these things are just going to sit here and bang away at these highs until shorts get out of it. This is one that certainly is doing that, was going up against the October 28th high of 1.2 million shares with 400,000 so far today. Not a surprise it's closing back in the trading range. Some of these stocks are at the lows, and interesting. Crombie and Fitch, another downgrade, another saying, and we're going to hell in a handbasket. Not on the lows though, so kind of interesting. Playing around 28 bucks. Auto Home, ATHM on the symbol on this one. Looks like it's getting ready to test 1.2 million shares from the October 10th low, $38.54. You want to be watching this one in the next few days. BlackBerry, still like a 40% short interest. This is going to be a lot like Sears, one of these stocks that never wants to die. The Walking Dead. That is, they don't know that they're quite dead yet. Again, monstrous short interest, and of course, it's going to take probably a major blowout for this thing to finally go down. But, even stocks like Radio Shack, RSH, what do you do? They've taken forever. But they'll just slowly go bankrupt. When we look at this one, people still highly short this thing. Going to be closing 1,000 stores. Of course, they're going bankrupt. Question is just, when do they pull the plug on this? SHLD didn't have good news either. Ooh, that can't be right. Let's do this again here. There we go. Sears Holding. Down today again, bad news, filling its gap where it gapped up on earnings. They were a little bit manufactured, but again, these stocks with high short interest, if you can hold them short, you're going to get paid off. But boy, does it take a firm hand to do this, especially this one that went up to 48 bucks. And to a low of $31.80 today. Look for it to do a Radio Shack, I suspect, next year. It's hard for me to believe that they're going to make it through this Christmas. I'm looking and going through their stores, and I think that there's still a premium to short this thing. I don't think you could just pull a short out and click a button and get them. I think they're still asking a premium of $2 or $3 to the actual price to continue Sears short. Burger King Worldwide, another one that's highly short out here. Looks like to me it wants to pop up to about 36 bucks. But again, the idea maybe is if we get a little bit of push here before the end of the year, you may want to watch these and see whether or not they are able to have a little short squeeze. Maybe one of the only ways to make some cash. Citigroup, another one that, especially in the last 2 weeks, have found a lot of people shorting it, is up against its January 9th high at $55.28. That high had 26 million shares, and we're into it for 21 million shares yesterday, 9.4 million shares today. So not uncommon to see these big high flyers out here. And if you are really the most conservative, you're going to need about 30 million shares from the May 30th, 2013 high to really break through this level of Haidem. Is that a word? Yeah, who cares? Other stocks of interest, GameStop. This one is one of these stocks that, again, I've talked about for a long time. They've done everything they could. They basically came down with monstrous volume. My guess is that we're going to see this company, it's probably 2 years from going bankrupt, but it is a company that the writing's on the wall as much as any bookseller with Amazon coming out with ebooks. It's just going to take a while. They've done everything from trying to sell cell phones to all kinds of other crazy ideas to get any kind of revenues in. At the same time, of course, major holders of this love every time they get a short squeeze and able to at least give some of those shares back to people on the wrong side, which are, of of course, the shorts. GoPro, again, you want to be watching this December 23rd when the lockup period is, what can you say, when the lockup period is over. This has got the biggest short interest, and again, another stock that I think that there's a 20% premium just to get in it, so it would have to drop to probably about $55 for you to break even if you shorted it now, or were able to even get shorts to get it now, and a lot of times it's easy. Herbalife, one of these, looks like old Mr. Icon is probably going to have a bad hair day on this one. Looks like an ABC down, but again, 40% short interest on this thing. There's no reason why to think that it couldn't have a 5 or 7 or 8 point day to the upside at any one time. Another one of these mall stocks that looks like it's done. My guess is this one's done after the first of the year, and I don't know if there's anything they can do about it. There's just not enough time left, and if the market starts pulling back, it'll kill their stock price. They're under $10, so a lot of funds already having to get rid of them. They tried to get this thing over $10 for a while to let the funds back in, but it's problematic at best, and this is down. No. And somebody had a question in the den. It's going to take a while. I want to get through these shorts today. I don't think solar stocks are going to have a bull phase. I think we're in for the selling of a lifetime in the next 6 months. And now, JD.com, a little pop-up here in this one. Over the last couple of days, it could be a short squeeze. I don't see a lot in that one that we could look at. Mankind, another one. Looks like they're going to try to drive this thing back down in the $4.25, $4.45 range, which is a gap up that's been acting as support for a while. The staffing company, you would think with the kind of job numbers that this thing would be doing better than it is. Myra Genomics, another one of these biotechs that is hugely short. And what can you say about that? It's got a gap. You could almost buy this thing back around 29. Kind of interesting to see that this is the one they pick on in biotechs. Nice consolidation phase out here between about $31 and $39. But to get anywhere, you need to have this thing probably come back in about $29 to buy it if you were going to go long. But that's what I'd be looking at. Pilgrim's Pride, PPC, not a stock that you would think a lot about being short, but certainly this one has given the shorts a buckwheat beating, a long and painful beating to the ribs. Pilgrim's Pride. Anyway, 3 days up. This one's probably gone through the end of it, but this is what a short squeeze looks like in a highly shorted stock. Normally you get this third day and you get about half the sell-off and it comes back into the trading range, but already one short squeeze in that guy. Not a lot going on in restoration hardware. This thing's just kind of going sideways, and I kind of like that if you're looking for a short squeeze in some of these stocks. Not a lot of volume to the downside. Again, look for these short squeezes probably to start any day now as volume starts to fade. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, it is a interesting question, and that is, what do I think of TZA? Frank asked that yesterday. He didn't tell me where he's from, but I just got the email now, so I'll try to answer it. I mean, you certainly have a lot of support. You need to break $13.21 on TZA with volume, and so far the best volume was 10 million shares. So looks to me like you got very good support out here. My guess is that if we're going to break it, it will probably be after the first of the year. But at the same time, it's hard for me to see a great deal of downside in this thing. So yeah, but I think we've got to have an abundance of caution. My guess is I'm going to come in here to the last week of the year and start shorting everything that I can find going into the new year. But it certainly looks like there's not a lot of juice left in this market. We're trading out at 2071 on the S&P cash, 2.2 billion shares. So this is a low volume downside day, probably the first of many. So we're going to be wanting to watch how stocks react. Is volume on the pullbacks light? If it's got a high short interest, watch for it for some intraday moves. But going to be very tough to be making any kind of big bucks. We're up against the wall for options. That is maybe 10 or 20 points in the S&P higher by a week from Friday. I don't see a lot of downside out here because you're going to need volume to come in. You're going to have some horrifically bad news and to really make it worth it. And it's pretty tough to see a call out here that makes me think that you're going to get a 9 or 11 or some other major black swan event before then. And I think you have to be betting on that black swan event. Dave, do you think lower energy prices is juicing corporate profits? Somewhat, but not near what interest rates are. And I think the Fed is going to have to start raising interest rates next year. And I think commodities like natural gas and oil are telling us that the story is deflation, at least maybe over the next year. So I'm not bullish on really anything other than short squeezes throughout the end of the year. I suspect that there is some kind of black swan event happening. I don't know if it's in the bond market, although, like I said, my spidey sense goes off every time I see Bill Gross saying something, and that is interesting. SCTY, I actually had somebody talking about that in the den and asking, not a bad-looking chart, but for me, I suspect that with 2 years before we have any change in Congress possible, you might as well be owning a coal company as a solar company. The politicians basically have two camps. One camp loves solar. The other camp loves other alternative energy and making cheap energy available. And, of course, most of these companies were nothing more than bagmen for politicians. And, of course, now the other politicians are in power, so they're not going to like these companies. The solar cell companies were thought to be the darlings of the Republican Party, and they got kind of beat up after the elections in 2008 any time they could find them. I suspect the opposite is going to happen in the next few years, which is the solar companies are going to be beat up by the Republicans instead of the fuel cells being beat up by the Democrats. So it is a political issue. Don't think there's any rhyme or reason to it other than money. We'll see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.